Hi, today I wanted to talk to you about the 5 city strategy. Now, the 5 city strategy is about diversifying risk. It's also about buying in the right city at the right time, because at the end of the day, property and investing is all about timing to get the most out of it. So I've got 5 different cities I want to give you an example on. We've got Sydney, we've got Brisbane, we've got Melbourne, we've got Newcastle, and we've also got Canberra. So if we look at those 5 options and what the future growth forecasts are going to be, we'd be looking at a few options ahead of others. So one would be Brisbane. So Brisbane's housing market is where I personally would be getting into and have got into because it's supposed to be the strongest performing housing market over the next 5 years, according to people like Tim Lawless from CoreLogic. The apartment market in Melbourne is very strong, as we've seen the housing market go bonkers over the last 5 years, and that disparity between the housing market and the apartment market grow exponentially. So we're seeing some very affordable apartments, sort of high-end options that have very strong yields in growth-orientated suburbs for a fraction of the price of what you'd see in Sydney. So some good options and good investments to have down in Melbourne. Newcastle has had some really good growth over the last 4 years. We're seeing some really strong interstate migration into that market. It's a very desirable area to live. It's got the beaches, schools, universities. Population growth is very strong. So we really like the Newcastle market. It's probably about 3/4 through its cycle, but some good options still to have to add to the portfolio. And Canberra is the capital city. It's always been a strong market, steady market, so some strong yields, strong growth potential, a good option to get into at some stage as well to add to the portfolio. So obviously we've got Sydney. Sydney is an area where we'll probably hold off for a while. It's already had majority of its growth. Most of us have already bought in Sydney, or if you haven't, you've got to wait for the next cycle, but you don't want to be buying into a market that has already had majority of its growth and you're holding an asset that's costing you hundreds and thousands of dollars every year just to hold an asset that's not going up in value and has a very low rental yield. So again, property is all about timing, reducing the hold period and getting them to double in value as quickly as possible. On average, the hold period and doubling period of a property in the Australian market is 13 years, but we want to reduce that as much as possible so we have the ability to buy more property and reduce our debt and have some good capital growth across our portfolio. So if you'd like to learn about the 5 city strategy and how to build a healthy investment portfolio, get in touch. Cheers.